Gold prices delivered a record run last week where we had seen prices rising all the way towards 4380 levels. Right from 4020 we have seen almost $360 of move in a single week before showing some signs of weakness towards the end of the week, closing the week at around 4250 levels. Now, yes, this is an exponential rise. Are we looking forward to 4500 and 4600 mark in the coming week? Or the highs are done and now is the time for gold to erase the gains? Remember, the faster the rise, the faster could be the drop. But right now, there are no signs. So, what should be our strategy in order to profit trading gold in the coming week? We're gonna see here with the help of charts and indicators. This is a weekly forecast. I do share my twice a day updates on gold every day. First with the Asia session and Europe session, next before the US session every day. Subscribe, press the bell icon to get the notifications for the updates. Do like, share, and comment. Join the free Telegram channel for live market updates and join the channel memberships here on YouTube to support the effort. Let's start. Towards the end of the update, I'll be sharing the trading levels, so watch till the end. And another important information here is that in the coming week, we are going to have the inflation data coming in from US, and that will be the basis for the next Fed meeting and the rate cut decision definitely. So what to expect? Are definitely the data is going to bring lot of volatility here into the gold prices. Already there is lot much of turbulence. We have seen massive bulls, and towards the end of the week, a massive reversal. So do be careful with the volatility here. With that, let's start. First, let's have a look at the weekly charts here. And let's have a look at the slight longer term. This is certainly an exponential rise. Every rise comes with a little retracement or consolidation. And this time, this is an exponential breakout here. You can see the moving averages now looking upwards. Where is the 20 period sitting? 20 period is sitting right below 3500 mark here, just close to 3500, 3600 mark here. And this is the zone from where we had seen the breakout move. Yes, this is still too far from the current. Again, the greater the divergence, the higher the possibility of a pullback here. So right now it is not showing any signs, but let's see what to expect. Now let's focus on the candles here. You can see how it has created the steps here, increasing body size. This is an exponential rise here. Now where it is closed far above the 20 period top of the Bollinger Bands, and thus it is having lot much of pressure from the top side, staying completely outside Bollinger Bands. Certainly last week also it was completely outside bands itself, and this time the closer is too higher, means possibly the bands might exponentially start of the week somewhere here, and thus it is going to be very important for gold to fall back within this zone 41 4200 4140 levels. These two levels are going to hold the key for the coming week. Any drop below these two levels, any drop below 4200 and 4140, should possibly be an indication that now we are looking forward for gold to erase the gains from this candle, where the movement is going to be all the way towards $4,000 levels again. But these two levels are going to play a very important role. Now see here the 5 period moving average. So far if you look at, 5 period has offered it a very good support, and now even if the coming week the 5 period moving average will be somewhere here between 4000 to 4100, and thus, and remember, the price is going to remain too far from the 5 period moving average, which means there should be a possibility of a pullback towards the 5 period. If you look historically, the 5 period, the candles have always just stayed close to 5 period here, and whenever it tried to diverge, look at this time, it tried to diverge and then we had seen a stronger pullback. So this is something you should be watchful of. Now let's eliminate the bias or the possibility of a reversal, and just looking at the candles, if you can see here, increasing body size, increasing bullishness, that is one part to it. Second part is the complete body is greater than half of the complete move, which suggests that it's still there is bullishness. There are no signs of bearishness here, because see, even if it is less than 50%, then you can say that the possibility of a reversal will be high, but right now it is more than 70% of the complete move, which is still a good indication for the bulls here. Now in the coming week, when it starts to trade on a bullish note, and if you see it trading beyond 4280 4290 mark, this is going to be important. Once you see gold above 4280 4290, there will be a possibility of a good pullback on the upside, where we can see price again trading beyond 4320 4330 zone. This is the next crucial zone, and if these two levels are taken, we can see a move towards 4380. Now remember 4380, this is a double top level. What we had seen last week, the Thursday's candle was closing at 4380, Friday starting at 4380. We have seen couple of attempts by gold to break beyond 4380 throughout the day Friday. Failing to do so, what we had seen, a massive reversal. And thus 4380 becomes the key here. In fact, let's include 4400 mark as well. So 4380, 4400. This is the zone which will decide what gold wants to do. Because till here, again, I am saying the faster the rise, the sharper the pullback. We had seen it happening on Friday. Thursday was an extreme move. We have seen $180 of move in a single day. I'll show you on the daily charts, and then a strong reversal has appeared on Friday's candle. So yes, on a weekly charts, a reversal yet to appear coming week could be the key here. Look at MACD, stochastic, extremely overbought, extremely overbought, extremely overbought. What follows? What follows? What follows? Yes, this time it is an overstretched run, and this time, in fact, this is an exponential rise. This is not a straight line rise here. This is an exponential rise. Look at the move, increasing body size, increasing bullishness. This is an exponential run. This definitely is a indication of possible pullback soon. But right now, I will be still cautious. I'll not be treating this as bearish as long as 4200, 4140 mark is not taken here. Look at MACD. Look at the divergence in MACD, too high. Whenever such divergence appear, certainly it calls for a pullback. Look at the candle here. It has breached past the 50 mark here. See, certainly this is an historic run here. This is a historic run here in gold prices. Not necessary that it is always gonna show a pullback, but yes, right now it is not showing any signs of reversal, and the possibility of a pullback is high. Look at the waves here. Rise, retracement, rise, retracement, rise, retracement, rise again. And yes, it is at the top of this. So yes, we have to watch out. Look at MACD. MACD is at extreme, sort of volatile. You can see vertical ascent here. And when it rises sharp, again, the drop has to be sharp as well. But these are markets. There are charts which have never shown a pullback. These are keep on rising. And right now, I'll not say that it is gonna turn bearish and it is going to bring long-term bearishness. But yes, right now, the possibility of a pullback remains high. If you look at the daily charts, now let me show you something on the daily charts. Look at just watch my Friday's update. On both the updates, Friday Asia session, Europe session, and the US session. In both the updates, I have highlighted very clearly. See, it is delivering a double top here, and double top is always a concerning point. Whenever you see such double top, what has happened? See, it is opened at the same levels, hit the double top, and see, a symmetrical candle has appeared. Here also, look at the move. The move was completely outside bands. It is opened outside band, and it failed to sustain, and then we had seen a pullback here. Now, the important point here is the price is yet to close below the 5 period. For you can see after a long time we have seen price is breaching below 5 period at least. So that is a good indication for the bears out here. Now, for the coming week, what to expect? Now, see, it is closed on a bearish note, that is pretty clear. If at all it starts to trade lower, if you see it trading beyond 4240, 4218, and then 4184, these three levels here. In fact, let's include 4200. I'll write down the levels towards the end, so you need not mug up or write down. Yes, once it trades below 4184, the possibility will be there. I will be looking at 4150, 4140, first target zone, 4100, 4090, the second target zone. And remember, this is the base 3950. This is the base 3950, which it may attempt to kiss. If you look at this move, rise and retracement, triple bottom was created here. Since then, we had seen an exponential rise, and it could show a stronger move, equally stronger move. Be careful, be watchful. Right now, I'll say the bias, you can see any of the analysts, any of the influencers, none of them are bearish on gold prices. Though I am not the one. I have been recommending. I have been expecting a drop since long. It is not dropping here. So let's see if See, the geopolitical factors I'm not talking about, the macroeconomic, the fundamentals I'm not talking about. Because what we are doing here is what everybody does it, we associate the move with a possible reason. When gold rises, we associate it with possible central bank buying, we associate with wars out there, we associate with Fed rate cut. How many information, how many news you want for to explain such a rise? I think. And then festive season demand, then it is shortage of gold prices, shortage of gold, then again. So let's talk about central banks buying. See, central bank buying was at its peak. If you just check the World Gold Council report, you'll find it was at its peak in Q2 2024. And at that time, the prices did not rally this much. Yes, we had not seen. And since then, the central banks buying, this is cumulative buying for all the central banks. It has been reducing in since 2020 till middle of 2024, Q2 2025. We have seen a reducing trend here. Central banks are not buying gold here, though they are still buying, but the proportion increase is lesser. That is what we are seeing. So they are reducing, or they are not reducing, but they are not so aggressive with the buys here. Q2 2024 was the time when they have hit the highs here. Though they have still aggregated almost 166 tons of gold in Q2 2025, which is still strong. Second, we associate with wars. Now almost, see, Israel Gaza has stopped, Iran has stopped, there is no war India and Pakistan. And now we can see, in fact, the Russia Ukraine has also been, you can say, now it is not so aggressive. The war is there, it is continuing since long, but it's not so aggressive. So wars has certainly stopped. Third, the weakening of dollar. Now, weakening of dollar, if you look at dollar weakened at its peak when in Q1 2025, I think. And since then, it is almost stable. Q1, Q2 2025 was the time when we had seen a stronger dip here. But now the prices are stable. We have seen a rather hike here, right from 96. We have seen the DXY, the dollar index, rising all the way towards 99 here. So I do not see more weakening here. Right now, it is stable. Still, the gold prices. So now see how we are trying to find out the reason. First this, second this, third this, all of these reasons at some point of time we have associated with the rise in gold prices. Now it is coming to Fed rate cut. This was in August 2025 when Chairman Powell has signaled that we are gonna start the rate cut cycle, and then the rate cuts are introduced. And see what has happened since then, the rally started. But see, again, we are associating it at some point of time. We are trying to find the reasons to explain the rally. But when you see a dip yesterday, let's say day on day there was a rise, what was the reason for such a dip yesterday? Now we again try to find out the reason. I did not find any such reason. So again, I'll say fundamentals work, but we try to do a postmortem of the move here and then associate it with some reasons. So let's wait for it to give you a momentum here. I'll not talk about the reasons here. Now let's talk about the charts alone. Second thing here is the divergence of the price from the 20 period. So it has a potential, it has a possibility to move towards 39.50, 40 zone. This is going to be the strongest support zone for gold. Remember, we had seen this rise in one single week. Hardly takes a week for it to move towards this zone. So this is something you should be watching. Stochastic overbought, now trying to look downwards, though every time it is seen downwards, again it is followed with a pullback. But yes, there is a possibility that it can continue with at least couple of sessions. Look at MACD here, amazing vertical rise here, and see the divergence of the price. Too much of divergence here. Too much of divergence always increases the possibility. Only thing is how high it can stretch this. I think the time has come. So next 2 to 3 sessions you should be careful, and the price level, that is 4380, 4400, you should be careful. Only bullishness is if you see gold trading above 4380, 4400 mark. Else you can see the downside is wide open. What has happened here? What has happened here? Let me take you back post COVID. What has happened here? See the ascent here and then the sharper decline. So And these are historic levels. See, it is not that it cannot sustain this, but I'll say we have to be cautious. RSI extremely overbought, trying to cool down. Coming to 4 hour. Now on the 4 hour charts, this is the triple top, which uh, I had been sharing in my Friday's update. Both the updates I had shared this, that this is a triple top, this is a double top. Do not buy as long as it stays below 43.80. And then what has happened? Prices moved towards 20 period. Now this is what I am expecting from the daily charts as well, that they have to reflect this move. Now if gold prices reflect this move, that is a move towards 20 period, then we can see the prices moving towards 39.50, 40 zone here, and there is a strong possibility to it. Now look what has happened here, a move towards 41.84, which is indeed a very good support, and then 41.50, 41.40, 4100, very good support exists here. Below that you can expect a greater down move here. Stochastic has taken a hit. MACD, see, extreme divergence. Finally it has crossed over. See, lot much of downside is still available on MACD on the 4 hour charts. Remember this fact. So next 2 to 3 sessions you should be extremely careful. Rather, I'll say till inflation data you have to be careful with the buys here. RSI coming out of the overbought zone. Now let's have a look at the last but not the least, the monthly candle. Now on the monthly charts, remember, see, first of all it has created the support here, and since then in 3 months what we had seen, a rise from 3300 till 43.8, 33% appreciation in just 3 months. And though it is right now trading at 42.50, and see, this was the beginning of year 2025. It was trading, it has started at 2600 mark, and for the year it is already seen a more than 60% yield here. Now interestingly, look at these two candles. Now when you look at these two candles, you will find this candle was almost of 400 dollars, though here in this candle we had seen prices breaching past the height of this, and yes, it is open flat and started to trade flat. Now if it is bullish, if it is really bullish, it has to close somewhere here above 4400 mark. Now what will happen? See, these two candles, bigger body size, increasing body size, and further bigger body size. If at all in the month of April, in the month of current month, in the month of October, we see gold price is closing above 4400 mark, that will set the base of, in fact, next month in November we may see bullishness prevailing here, which could take it towards 4800 to 5000 mark. There is a strong possibility to it. If you include all the factors, and if you look at the Gaga, what markets are doing right now, everyone is buzzing about 5,000, 6,600, 8,000, $10,000 targets as well. It can do wonders. So you have to be careful. For this to happen, for the month of October, we must see prices closing above 4,400. That is first part. Second, if you see the closer of the month somewhere between 4,000 to 4,100, that's a neutral indication that it still says that prices are not yet turning either bearish, and even the bulls are not so aggressive here. If at all, it closes the month at around 4,000 to 4,100. Next thing is any close of the month below 4,039.50. Any closer of the month below 4,039.50, that will set the base for the bears to take over from here, and that could lead to a stronger price correction. So we have set our zones here. You have to be careful of these zones. Now look at the stochastic on the monthly charts, extremely overbought here. Historic run anyways we are seeing. What an exponential rise here in MACD. See this? See this? For the first time, this candle is closed or it is trading beyond 100. This is amazing. This is amazing. Look at the divergence of the 20 and 50 period. Amazing bull run it is. Historic run it is. RSI extremely overbought. So now, considering this, time for me to give you the trading levels. And before I give you the trading levels here, if you're willing to learn this art of trading, be a part of my 35th mentorship. In this batch, you get to learn all the tools, techniques, and strategies which can help you identify the profitable trades and help you trade profitably. Connect with me for your queries, else you can be part of my signals channel on Telegram, where trading as per the signals you can profit. Write an email, ping me or Telegram for queries. Those looking forward to a trusted partner which offers you a stress-free account, lowest spreads, no hidden charges, easier transactions and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. First, where you should, let's talk about the levels to buy. I will recommend you to buy at 42.64 levels itself. Expect it to move towards 42.78-84 zone. This is the first zone which it would like to achieve. Then 4300, crucial here. This is crucial. 43.18, the next one, and 43.18.24, this is the next one. And if this is taken, if it, you see it is staying below beyond this, expect 43.46, 43.60, and then the most important one at 43.80. Beyond 43.80, 4400 is a must, and a move beyond 4400. Close your eyes, stay bullish for 4500 mark very, very soon. Appears difficult so far. I think 43,800, 4380, 4400 is what you should be careful of. On the downside, you can sell here at 42.36 levels. Expect 42.16.18 as the first target, 4200 as the next, 41.84 as the next, and then 41.50, 41.40 levels should arrive. This is going to be a very good support zone. Below 41.50, 41.40, ideally I will be looking forward to 41.08, 39, 40.90 the next. This is crucial. Below 40.90, stay bearish for 40.50, 4,000, 39.50. This is what I am looking at if at all gold starts to reverse. This could be a crucial support. Any drop below 39.50 will crash the markets here. Take your trades and positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch. Join my signals channel. Reach out to me for your queries. Join the free Telegram channel for live market updates. Join the channel memberships here on YouTube to support the effort. See you again on Monday with my daily forecast. Do not miss to watch it. Thank you.